Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's have a look again on the Bitcoin market. So recent week market has spanned in relatively tight range, so making no impact on the longer term charts, on the weekly, on the monthly chart and even mostly on the daily. We have the same picture, just two moments to comment today. First of all, on the monthly chart, when this engulfing pattern just has been formed, 2 months ago we said, well, let's have a look. Maybe it's depending on what will happen next month. So either this will be bearish reversal pattern with the following consequences, with a deeper retracement back to the 50 even area, because it will be washing rinse of the top, engulfing on the top and so on. Or if market will show backup action, it's totally could change the picture. And this particular has happened. Yes, we see some minor retracement out of the top at the end of the May, but in general, this candle is similar in the size as the previous one. And now it started looking more bullish rather than bearish, just because it reminds the type of action in the market just stands in a tight consolidation, building an energy for a possible pull, next step up and possible breakout. So currently this construction started looking bullish. So let's keep an eye on what will happen on the lower time frames. From this standpoint, if we'll take a look at the weekly chart, this pattern, as we're talking about, this possible double repo sell, although it is not confirmed yet, or maybe it will not be formed, but in general, as I said, it's not very logical in the current situation. So if we would suggest a bullish background on the monthly chart, here we should have also something bullish, but a possible appearing of the double repo sell, it's really will be big riddle. So either this pattern will fail, it turns to the bullish pattern, it's also possible, or it will not be formed and something different will happen, will appear. We will see. But potentially appearing of the double repo sell pattern might be a really big challenge, and it will be difficult to combine this pattern with things that we see on a monthly chart. So we will see how the situation will develop here, so let's keep an eye on this process. Meantime, on the lower time frames, if we'll take a look at the daily chart, we have the bullish context. Last week we talked about the possible reverse hand and shoulders here, and suggesting that if market will show the drop somewhere to the 62 area, or maybe 63, somewhere in this level, it will be pretty nice low to consider taking long position with the possible upward continuation, which is absolutely logical in the situation and stands in agreement with the setup on the monthly chart, right? So in this case, probably no double repo pattern on the weekly chart will be formed. But now, as you can see, that market is forming some tight consolidation here. And in fact, right now we have two different setups of different scale. So if you're trading and you'd like to trade this pattern, here's two things to think about. So you could just ignore all this stuff and stubbornly wait when the drop will happen, and we will see price around 63. Maybe this will be not even bad decision. If you would like to take a bit more flexible approach for trading of this big pattern, you could think about taking some part of the position here, because we do not know what will happen around this level. I will explain a bit later why actually market could start upward action right from here. From that standpoint, you could, for example, split your position, take the 25-30% of your trading lot here and see what will happen. If market indeed starts rallying, you will be in the market, and that's great. If not, and market drop to the 63, you will get the bulk of your position lower with the average price around 64.50, 65. It will be also great price entry. So this is just some options that you could think about. This is the first step. Second setup stands on intraday charts and stands in a direct relation to this consolidation. Because if you take a look at the 4 time frame chart, you clearly could see that market is forming the triangle. This is potentially bullish pattern, some kind of dependent, and that's why I'm just was talking about possible position split and taking it in parts. Just because, as you understand, after upper direction appearing of the triangle, it always has some bullish sentiment, and here we could see also upside breakout. This setup suggests that maybe some traders would like to trade particularly the breakout of the triangle. As usual, triangle keep chance on the breakout in opposite directions. If it will be to the upside, you could get upward butterfly, right, with an extension above the A point, or if it will be to the downside, it might be downside butterfly. And in this case, here we have few targets that we have specified last time, and in case of this butterfly, we will get 65 at least, 127 extension of this leg up, or 1618 will be 63.50, which is perfectly stands in agreement with the shape of the daily reverse head and shoulders, right? So why this breakout might happen to the downside? Mostly it stands in relation to other markets' performance. Particularly speaking, if we'll take a look at the yields in the United States, you will see we briefly talked about this last week when we prepared analysis on the euro currency, on the gold market. Let's take a look on the weekly chart. We have bullish grabber. Yes, personal consumption expenditures release has pushed price lower, or better say yield lower, but still market has closed above the MACD, and we've got the bullish grabber. It suggests jump of the yields above 4.75 area. Here is market once again is flirting with the MACD. This is just the beginning of the week. We do not know what will happen, but we have the payrolls report and other statistics. And it also might happen that we will get close above the MACD. We will get second grabber in a row. So rising of the yields, it always supports the United States dollar, which means that the chances on the breakout to the downside of this triangle also are not really bad. So they really could happen. And if you would like to trade the triangle breakout, maybe you could think about taking using the stop entry orders. So or try and take position as close to invalidation point of the potential pattern as possible. So if you would like to take the short position, take it as close to the C point as possible. If you would like to take the long, take it closer to these lows as possible, or these lows as possible. So because you will have to place stops either here if you're buying, or here if you're selling. This is one possible way to act. A second possible way is to use, as I said, stop entry orders. So for instance, you could buy if market will jump above the C, right? In this case, downside butterfly will be erased, chances in market supposedly should keep going higher. You will take in the long position here in the moment of the breakout. If no breakout will happen, your stop entry order will not be filled. You actually could use them both because they can't be filled together. So only one of them will be filled. Correspondingly, for the short entry, you could use the stop sell order somewhere around the B point. The one problem here is just actually we have confidence. But in relation to the triangle, this is approximately the way how you could just follow this situation. So that's actually what we have currently for consideration. Either trading of the triangle if you would like to, or if you're trading on a higher time frame, you could keep watching for this hand and shoulders pattern. Just think about the possible options, how you would like to take the position with this pattern. So either in parts, or you intend to wait for precisely 63, 64 area, or you prefer to wait when the major data will be released and see what will happen. It's very personal, so every trader has its own tools, how he prefer or she prefer for to enter the positions. So that's what we have currently on the Bitcoin market. Let's keep watching. Hopefully this week will be interesting.